Every Australian car dealer has had the same conversation. The customer is ready. The deposit is paid. The trade-in is on the lot. The finance paperwork is submitted to the lender. And then the broker rings back, 3 hours later, with a sentence that ends the entire transaction in 14 words. The lender will not finance that vehicle. No explanation, no counteroffer, just a refusal. And the sale collapses, the buyer walks away, and the dealer is left with a vehicle that has just lost meaningful value in 14 words. 8 used vehicles sold on Australian dealer lots and private listings today are now subject to financing restrictions at the country's 4 major lenders and at the secondary finance providers underneath them. Not because of the buyer's credit position, not because of the loan amount, because of the vehicle itself. Australian banks and finance companies maintain quiet internal restriction lists. Vehicles where the depreciation curve, the parts availability, the brand status, or the wholesale auction performance has reached a point where the bank no longer accepts the vehicle as adequate security for the loan amount requested. The vehicles on those lists are not being recalled. They are not being banned. They are simply being treated by the people who provide the credit that powers the entire used car market as too risky to lend against. The Australian Finance Industry Association published their 2026 Secured Lending Review in February. Quote, "Loan-to-value ratio restrictions on specific used vehicle categories have expanded materially across all major secured lenders in 2025. Categories now subject to either tightened LVR caps, mandatory inspection requirements, or outright lending refusal have grown from a documented 12 vehicle categories in 2022 to over 30 in 2026. In plain English, the number of cars the banks will not lend against has nearly tripled in 4 years. Most of the affected vehicles are not exotic. They are not extreme. They are mainstream models the Australian buying public still encounters on dealer lots every week. Vehicles where the financing risk has crossed a quiet threshold that the buyer never sees, but the bank has clearly drawn. 8 used vehicles, currently listed on car sales and Australian dealer lots, that the country's major lenders are now either refusing outright, capping at restrictive loan-to-value ratios below 60%, or requiring mandatory third-party inspections before approval. Brand by brand, ranked by severity of restriction. Here is what is actually happening, in the part of the market the buyers and sellers never see. Restricted Vehicle 1, the Range Rover Sport, second generation, sold in Australia between 2013 and 2022. Current loan-to-value caps from major Australian lenders, 65% maximum on pre-2021 model years, down from 85% in 2022. That single line, in plain financial terms, means the bank will lend you 65 cents in the dollar against a vehicle the dealer is asking you to pay 80 cents in the dollar for. 3 documented reasons. First, the air suspension system. The pneumatic suspension on the second-generation Range Rover Sport has a documented failure pattern that, in Australian conditions, accelerates beyond global averages. The replacement cost, parts and labour, is between $4,000 and $7,000 per axle. Second, the ZF 8-speed automatic transmission valve body failure pattern at higher mileage. Repair cost, in Sydney and Melbourne specialist workshops, ranges from $4,500 to $6,500. Third, the parts supply chain. Land Rover's Australian parts network has compressed since 2023, with several specialist component lines now routed through United Kingdom warehouses with 6 to 12-week delivery windows. The banks have read the wholesale data. The wholesale data shows a vehicle whose true salvage value at default is materially lower than its retail asking price. The LVR cap is the bank's protection, and the buyer who wants to finance one is now required to bring 40% deposit in cash, on top of stamp duty, registration and insurance before the loan will be considered. Restricted Vehicle 2, the Maserati Levante, all variants, all model years, current major lender position, inspection mandatory at applicant's cost, LVR cap 55%, decline rate above 80% for applicants outside top-tier income brackets. In plain English, The bank will not finance a Maserati Levante for most Australian buyers at any price, under any reasonable LVR. The car is, for financing purposes, treated as a private cash vehicle. 3 structural reasons. First, the Italian parts supply chain. Maserati Australia's national parts inventory is small. Component-specific lead times of 3 to 6 months are routinely reported on Australian Maserati owner forums. Second, the wholesale auction performance. Maserati Levante 3-year-old auction results in 2025 averaged below 40% of the original drive-away price. The banks see those results. Those results define the recoverable value the bank can rely on if the borrower defaults. Third, the brand's own contraction. Stellantis Australia, Maserati's parent corporate structure, has materially reduced Maserati's Australian dealer footprint since 2022. Fewer dealers means fewer trained technicians, means longer repair queues, means greater holding cost on defaulted vehicle remarketing. Every one of those factors compounds against the bank's risk assessment. The result is an effective lending freeze on a vehicle the dealers are still attempting to sell at retail prices the financiers will not support. Restricted Vehicle 3, the Alfa Romeo Giulia Quadrifoglio, the high-performance variant. Current major lender position, LVR cap 50%, mandatory inspection required, loan term maximum 36 months, half the standard 60-month default for the same loan amount on a more conventional vehicle. The Giulia Quadrifoglio is, mechanically, an extraordinary vehicle. A Ferrari-derived twin-turbocharged V6, a chassis tuned by ex-Ferrari engineers, and a driving experience that almost every motoring publication has rated competitive with cars costing twice the price. The banks do not lend against driving experience. 3 structural problems. First, the documented timing chain failure pattern already covered in our earlier report on cars, Australian mechanics refuse to work on. Workshops will not quote on the Quadrifoglio's 2-litre or 2.9-litre engines without significant deposit and condition of vehicle clauses. Repair costs above $18,000 are routine. Second, the depreciation curve. 3-year-old Giulia Quadrifoglios sit on Australian dealer lots, on average, for over 140 days before selling. Wholesale auction results show retention below 42%. Third, the buyer profile. The Quadrifoglio attracts performance segment buyers, a category banks correlate with elevated insurance claim frequency, accident write-off rates, and repossession statistics. The combined effect is a financing environment where the customer who can actually afford to insure, service, and run the vehicle is, by definition, the customer who does not need to finance it. And the customer who needs to finance it is the customer the bank will not lend to. If you are about to apply for finance on any used vehicle in Australia, the next 5 minutes of this video are the most important research you will do before signing. This channel publishes a new investigation every week into exactly what the dealers, the wholesalers, the banks, and the residual modelers already know about the Australian car market. Subscribe to the Calder Report. Tap the bell. Every video could save you a finance refusal you did not see coming. Restricted Vehicle 4. The Tesla Model X, sold in Australia between 2017 and 2021. Current major lender position. LVR cap 60%. Battery state of health verification mandatory before approval. This is the only vehicle on this list where the lender restriction is explicitly attached to a technical inspection of a specific component. The Model X uses a battery pack that, as of the earliest 2017 examples now reaching 9 years of age, has crossed the threshold where Tesla's original 8-year battery warranty has expired. State of health degradation, in Australian conditions, has reached the point where the banks now require independent verification that the pack retains sufficient capacity to be considered serviceable security. Battery replacement cost on a Model X, when out of warranty, ranges between $35,000 and $55,000 Australian dollars. Some specialist quotes have exceeded $65,000. The bank, when assessing default scenarios on a vehicle of this value, must consider whether the repossessed asset can be resold without a $40,000 reconditioning expense. The mandatory inspection requirement is the bank's hedge. The buyer who passes the inspection still receives only 60% LVR. The buyer who fails the inspection is declined outright, and every month, more pre-2022 Model X examples cross the warranty expiry threshold. The restriction is not loosening, it is tightening. Restricted Vehicle 5. The Audi Q7, the second-generation variant sold in Australia between 2016 and 2024. Current major lender position, LVR cap, 65% on vehicles over 5 years old. The Q7's lending restriction has nothing to do with the Q7 specifically. It has to do with Audi's parallel arrival of the Q6 e-tron on a purpose-built electric platform at a similar new car price point. Used buyers in 2026, walking onto an Audi dealership lot, see a 3-year-old Q7 next to a brand new Q6 e-tron. The new car wins, the used Q7 sits, and the sitting time generates auction data that the banks now use to model future recovery values. Second-generation Q7 wholesale auction performance has fallen materially since the Q6 e-tron entered the Australian market in late 2024. 3-year-old Q7 retention has dropped from 63% in 2023 to 48% in 2026. That 15 percentage point shift in 3 years on a vehicle previously considered a stable used market asset is the kind of trajectory that triggers bank policy updates, which is what happened in the second half of 2025 at 3 of the 4 major Australian lenders. The Q7 is still being sold. It is still being driven. It is still mechanically sound for buyers who can fund the deposit themselves. But the financing pathway that supported its used market value for nearly a decade has been quietly downgraded, in a way most prospective buyers will only discover at the moment of loan application. Restricted Vehicle 6, the Jaguar I-Pace, current major lender position, LVR cap 50%. Some lenders declining outright on vehicles over 3 years old. The I-Pace combines every individual restriction factor on this list in one vehicle. First, Jaguar Land Rover Australia's contracted dealer network and limited parts supply. Second, the I-Pace battery pack, sourced from LG Energy Solution, subject to a documented degradation pattern more aggressive than Tesla or Hyundai equivalents in Australian conditions. Third, the brand's own future. Jaguar has publicly committed to an electric-only relaunch in 2026 to 2027, with an entirely new design language, an entirely new platform, and explicit messaging that the current Jaguar lineup, including the I-Pace, will not carry forward. In plain English, the buyer signing finance on an I-Pace in 2026 is signing on a vehicle the manufacturer has already publicly distanced itself from. The banks have read those public statements. The banks have read the auction data. The banks have read the parts availability reports. And the banks have sensibly concluded that the I-Pace is not the kind of asset they want against a $40,000 loan. 3-year-old I-Pace retention in Australia is now below 40%. The cars that do trade are trading mostly for cash, to buyers who have already accepted the residual risk that the bank refused to underwrite. Restricted Vehicle 7. The Nissan Patrol Y61, the previous generation Patrol sold in Australia between 1997 and 2016. Current major lender position. Most lenders refusing finance outright on vehicles over 15 years old. Selected secondary lenders offering finance at LVR caps below 50% with mandatory roadworthy and engineering inspections. This one is age-based rather than brand-based. The Y61 Patrol is, by every Australian Outback measure, one of the most respected and capable four-wheel drive vehicles ever sold in this country. The Z25 inline-6 diesel is legendary. The chassis is bulletproof. The aftermarket support is the best of any 4x4 in Australia. And none of that protects it from the bank's age-based lending policy. Vehicles over 15 years old, regardless of condition, regardless of asking price, regardless of buyer profile, are now subject to systematic restriction across the 4 major Australian lenders. The reason, from the lender's own published policies, is straightforward. Vehicles over 15 years old are statistically more likely to be written off in an insurance event before the loan term completes. The bank holding the loan against a 15-plus-year-old vehicle is, in a write-off scenario, exposed to a remaining loan balance the insurance payout will not cover. The result is that Y61 Patrols, which routinely sell for $40,000 to $70,000 in the modified market, can no longer be conventionally financed by most buyers. The market that buys them is, increasingly, a cash market, and cash markets price lower than finance markets. That price compression is now visible in the wholesale data. Restricted Vehicle 8, the Ford Mustang Mach-E current major lender position, LVR cap 55%, mandatory inspection, restricted to buyers within Greater Sydney, Greater Melbourne, Greater Brisbane, Perth, and Adelaide metropolitan service areas. That last clause is the most unusual on this entire list. The Mach-E was offered for limited Australian sale through Ford Australia's right-hand drive engineering program in deliberately constrained volumes between 2023 and 2025. Ford has since deprioritised the Mach-E in its Australian electric vehicle strategy in favour of the Capri and the next-generation Explorer. The vehicles already sold in Australia, fewer than 1,500 examples nationally, are now subject to a parts and service environment that simply does not exist outside major metropolitan areas. The banks have responded by capping finance to geographies where Ford's authorised electric vehicle service is actually accessible. A buyer in regional New South Wales attempting to finance a used Mach-E is, in 2026, encountering a lender response many Australians have never seen. Refused, not on credit, not on the loan amount, not on the deposit. Refused on the postcode. That is how far the financing environment has tightened on specific vehicles. The bank is now telling Australian buyers where they may and may not live if they want a finance approval on this particular car. Every vehicle on this list shares one thing. The banks moved before the buyers knew. Lender restriction policies are not published. They do not appear in marketing material. They are not disclosed at the showroom. They live inside underwriting manuals that are updated quarterly, distributed to brokers under non-disclosure clauses, and revealed to buyers only at the moment a specific finance application is submitted. By the time the buyer sees the rejection, the bank has already known about the problem with the vehicle for, on average, 18 months. And the dealer? The dealer has been watching applications fail on these vehicles for months. The dealer knows. The salesperson on the floor may not. The finance manager certainly does. The buyer is, again, the last person in the chain to find out. Here is what every Australian about to finance a used car should do this week. Before you commit to a vehicle, before you pay the deposit, before you sign anything, ring your broker or your bank. Tell them the exact make, model, variant, and year. Ask one question. Is this vehicle on your current restricted lending list? Get the answer in writing. If the answer is yes, walk away. If the answer is no, get the LVR cap in writing too. If the LVR cap is below 75% for a vehicle the dealer is asking close to retail money for, you are looking at a vehicle the bank is signaling it does not trust. That 2-minute phone call is the single most expensive piece of free advice you will ever receive. The benchmark, the same one we use in every report on this channel, is the Toyota RAV4 Hybrid, 81 to 84% retained at 3 years, financed at standard 85% LVR with no inspection requirements at any major lender. Accepted as security without question. The brands that protect your investment are the ones the banks still believe in. With over 30 vehicle categories now subject to lending restrictions in 2026, that list is short and getting shorter. Subscribe to the Calder Report. Tap the bell. Every week, we show you exactly what is moving in the Australian car market.